Hello, hello, good morning, good afternoon.
Hello,
How's everyone doing?
still alive.
Uh, uh, Given what's happening in the world, I think that's a good thing. Uh, what else? In fact, I think couple of yeah, I think it was a Tuesday, etc. I was thinking about our meeting and was preparing the content. I had a different content, and then yesterday I had to change it. So um, I don't see Jose has joined yet. Last week I did receive a request from I think couple of you guys to do a analysis on company, which is what I started doing earlier this week. But then a lot of stuff has happened in the last 2 days. So I thought, you know what, we can always go and do a deep dive on a company later. But I think there may be some more urgent stuff that we may want to discuss. So that's what I want to focus on today. Okay, anything new? We'll give a couple of minutes for others to join before we get into our regular discussion. Anything new found? Anything new that caught your eyes?
Well, we've got this $37 trillion debt that has to be dealt with, and there is an approach to successfully dealing with that and making profit and having very low downside.
Uh, you should reach out to our congressmen and women to tell them. We have not been able to find that out uh, yet because after administration, we've been just adding to our debt. If you have some great ideas, I'm sure they'll be all ears. We thought we had, but now with the latest reconciliation bill, what we plan to add another what 2 4 trillion dollar. I don't even know. Becoming immune to the big numbers now. Billion doesn't seem like a big number anymore because we always have been talking about the big T's, right? The biggest market cap companies are a few trillion dollars. Our debt is $37 trillion. Stock market is $60 trillion. Bond market is $100 trillion. So yeah,
Um, Vivek, can I address this?
yeah, sure, go ahead.
When I was in undergrad, when I was taking international relations class, the professor, who's still working, was bringing up 4% under Reagan, and then I don't remember. I think it's Bush Jr. Because we always learn. I'm a registered Republican, by the way. We always learn that Republicans are for small government and saving money, but under Bush Jr., he blew that one up. They're a bunch of hypocrites now.
Yeah. So yeah, I don't want to get into Republican versus you know the Democrats. This I just pulled up the chart of total public debt. Where do we see the dips? And I'm sure starting 1970s, we had both parties at different part of a time, right? And but we've been just going higher and higher. So it is,
Another note: the quality of life has not improved that much in the Bay Area, as opposed to no, has not improved as opposed to say Shanghai, Hong Kong, and Beijing.
yeah, that could be true because always the if you're starting from a lower base, your the change or the percent change and the impact will be much higher than
Well,
if you're already at a little higher base. So
Vivek, uh, I rode the high speed rail 12, 13, 14 years ago, and they just got electrified. But I'm just saying that they're not innovate. I mean, yes, they're innovating in the private industry, but not public industry.
yeah,
Uh,
no, I'm with you because some of the countries which did not have a basic infrastructure to start with, when they started building infrastructure, they'll build it on what's the best, right? If you are starting and building a new city, it's always built is easy and better to build on a greenfield project where you don't have anything else, because then you can design it, build it the best way you want to be. But if it's a city is already there, if it's a brownfield city, it's always very difficult to modify it. We have our banking infrastructure for years, and hence, I mean, we don't have a companies like Alipay, or we don't have a companies like a UPI infrastructure which exists in India. You can pay just through QR code, like you can do it on through the Alipay, etc. Because India never had the good penetration of credit and the debit cards, so they directly jumped on to the mobile payments. US, anytime you try to go towards frictionless mobile payments, there's a lot of incumbent players who would try to oppose it. And I think today we're gonna talk about one of the news items that came around. So
Vivek,
always happens if you already have infrastructure technology, replacing something is becomes difficult than starting or building it up from scratch. So
Vivek,
yeah.
yeah. Um, there is one uh, online investing outfit that has had spectacular success in posting in spite of everything that's happening in the markets, in recommending winners and dampening the results of losers. And I'd be happy to post a couple of paragraphs from them at at uh, at your convenience.
Yeah, you can post in the chat, but I generally don't follow anyone else's recommendation without doing my own study.
Well, no, that's
Because
right. But the point is that this outfit at deepcaster.com is the name of it. It has a record that's spectacularly good.
that's fine. It's okay. Anytime anyone can pick up a time period to have the record that you want to show, or the companies want to show. So
From
I, I
2008 to the present.
that's what I mean. Again, that record might be talking about the best returns over the year. And as an investor, I may not be looking for best return. Maybe I'm looking for a little more protection. So all I'm saying is,
Well, also protection.
well,
Uh,
that's fine. You can share the link. I don't mind that, but I don't bring other people's and services etc. saying, hey, this is the best. Go ahead and use it. Uh, you can post the URL if you want to. I will let individual people make the decisions. I review services, I review reports from a lot of analysts, but at the end of a day, I have to decide what investment is good for me based on
of
my risk
course.
profile,
So
based on what I want to do in
you suggested I post it on chat.
for my portfolio. Yeah, you can put it on chat. Right? If
Okay.
any individual is willing to, try something out, go ahead, do it. I mean, this is where the forum is. We can always open. I'm always open to learning new stuff. By the way, I this week I attended a investment management conference. I something popped up. I got to know about like 11 p.m. The day before, and I signed up, and I just landed there. Obviously, they did not have a badge and named for me, because who's gonna look at the registrations after 11 p.m. when the meeting starts at like next day morning at 11 a.m. Anyway, I landed there. It was a good to attend. It was a there were like a panel discussions, and the crowd were the panelists were mostly wealth managers, fund managers, and the audience was mostly you know like some fintech firms were building solutions for advisors. There were some fund managers. There were a couple of financial or students as well. uh, One thing which I think I have to learn, because I've been mostly spend my life on the tech side, is, hey, even if you're in a Bay Area, when you're going to any meeting related to investing, maybe take a jacket with you. When I walked into the room, I was the only one wearing jeans and shirt. And I'm like, everyone is actually wearing a jacket. But later on, I think a couple of folks came in which were like me, with just very good shirt. And anyway, I had nothing to sell. So people, when they ask, okay, which company do you belong to? What products do you have? I said, I'm not here to sell anything. I don't work for any company. I'm an individual investor. I'm just here to learn what other people are investing in or what's the market trend is. So that was fun.
Anyway, I just posted a couple paragraphs on the chat from deepcaster.com.
Sure, thank you. So that was a good time. All right, I think we got a decent crowd, so let's get going. Anyone here joining for the first time? Any first
That would
time?
be Carl.
Hey, Carl, welcome. Anyone else? Jessica
Uh,
says she is the
Satish
first.
here.
Okay,
I think I've attended last time. Last time means last week, and this is the second week.
okay, thank you. Cool. Oh, we got a lot of first timers. I don't think we'll have time to introduce all, but maybe we can have some time for two introductions. Who wants to go ahead? Anyone wants to introduce themselves? We can do two introductions. All right, a lot of
Hello, my
shy
name,
people. Go ahead, go ahead.
hello, my name's Eric. This is my first time on the call. Uh, I'm a resident in Las Vegas. Just came across it, retail investor. Just looking to learn a little bit more and be a part of a community and kind of upgrade my skills and learning.
Cool. Thank you. Welcome, Eric. Anyone else?
Hi, Satish here. I live in Bay Area. I'm 42 years old. Till now, I never invested in stock market, but as not an investor, but I used to trade back 10 years back, but not now. I'm trying to learn to invest.
Cool. All right, welcome. It's never too late. The best time to invest was yesterday. The second best time is today. So welcome to our meetup, and hopefully you'll learn something from these discussions that we have every week. And my focus mostly is around as a retail investor, right? Not as an institution investor, not as a fund manager, etc. What as a retail DIY investor, what we can do is what I'm focused on. All right. So with that. Let's get going with our today's session. Let me make sure I have the document updated. Okay, welcome everyone to our discussion number 281 of weekend uh, gathering to discuss about stocks, markets, sometimes cryptos, stocks market, crypto, anything, bonds, IPO, meme stocks, etc. And of course, you know, some good insights, some good reports, etc. So, like I said, focused on DIY retail investors because that's what I am. I've been investing in US markets almost 11 years. Individual stocks more seriously for 8 years. In the last 2 years, 100% focused just on investing. Okay. With that, we will talk about stocks. We will talk about markets. Anything that we discuss here is not an investment or financial advice. Don't take anyone's word as a gospel. Go and do your own due diligence because your life is different. My life is different. And no two portfolios can be same because two individuals are also different. Okay. So what I want to talk about today, major stuff will be given what's happened in the last couple of days in the market. So I changed the topic a little bit. Earlier, I thought I will do a deep dive into Chewy. Jose had requested for Chewy last week. So I did prepare the content, but then we can do that next week. So today I want to focus on, given the volatility that we have been seeing in the markets, not that it is new, but lot more stuff keep getting added week after week. So want to spend some time on how to, how can we navigate these uncertain markets, right? And then of course we'll continue on the report of Big Ideas 2025. I think there are four topics we have to cover. Maybe I'll spend time in doing that. Review some charts, some crypto news, etc. And then if we still have a time, we will open it up for breakout rooms, and you guys can network with others, talk with others, and if you have some of you may be traders, go and talk about trading strategies, chart signals. Some of you may be purely just an option traders. You can talk about Vega and Gamma, all that you want to. So that will be, overall agenda. If you have questions, put it in the chat. I will be monitoring the chat, or raise your hand, then I can, give you opportunity to come and, talk about your questions. We don't talk of politics. Politics and business and investing are becoming intertwined, but I tend to stay away from any political discussion. I'll only focus on the economic impact, as I may say it, or if you have a thoughts on that, sure, happy to discuss on that one. All right, with that, let's get going. Okay, so first. There have been two heartbreaking events that have happened this week. Um, so my heart goes out to all those who have been impacted by it. First is obviously we had a plane crash happened, I think, on Thursday. I was when I woke up on Thursday morning, looked at my phone. I'm like, what? This happened. Another Boeing crash, Boeing Dreamliner 787 crashed in India, killed 241 passengers out of 242. And the worst thing was the plane actually couldn't even gain enough height. It took off, and within a minute and a half, it, it basically crashed. So it couldn't even cross the city, and it landed in a medical college, which means another, I think, maybe 50 or 60 uh, doctors, budding doctors in the medical college, they also perished. So bad situation. If you are an investor in Boeing, yeah, you won't probably happy with this. The stock also fell down maybe 7-8%. Then it did close 4-5% lower. But more than the stock, I think the bigger question is why we continuously see these issues with Boeing planes, right? Literally falling from the sky. So there was a Boeing CEO was to go to I think Paris air show, and then he canceled it because now we got a bigger crisis at hand. A lot of my friends from India, we have WhatsApp group. Suddenly, everyone has now become a aviation expert. Anything, anytime anything happens in the world, on the WhatsApp university, people are suddenly, have an opinion to share. So, a lot of, we really don't know what caused it. I think the the black box has been have been found, and we're still waiting for what's the real reason could be. I don't want to speculate whether it's a Boeing issue, it's a pilot issue, or it's some bird hitting the engines issue. We don't know. One silver lining, which was completely shocking, was one person just walked out from this accident. And there were, and when I saw the video of it, it was like, oh, of course, he was bleeding, I think, from a face, etc. But he was in a good enough position to just get up. He unbuckled his seat belt and just walked, came out of the wreckage. Everyone else dead. 242 people were on board. Only one person survived, which was pretty, I mean, amazing. So he was seated in seat 11A, and I think because of the impact, the emergency door broken, and for whatever reason, he was not hurt. and he unbuckled and he just walked out of that. So we still see, what the eventually what the data tells us what the issue was, and what will happen to Boeing stock. So let me just pull Boeing, which is BA, and yeah, this is what on Thursday we saw a dip, and then of course on Friday we had another issue, which is the second one. We got another war, and when I say war, it is actually a hot war. We're now having drones and the missiles and the bombers, flying between Israel and Iran, and these are uh, never good for the ordinary citizen, right? And my heart goes out to those who are getting impacted. Like there have been so many conflicts happening. We are having in US there are protests in the city, LA, going through that. On We have a plane falling out of sky, and then we have a war going around now in Middle East. The Russia Ukraine is going on for almost now 3 years, entering its third year, and I think it's already 3 years, right? It started in 2022 somewhere, and now we got a new conflict going between in Middle East. So it did impact the markets. On Friday, we saw market sold off. There are a few sectors which were higher, obviously, with this conflict. The crude oil prices will be impacted. So we will look at some of the chart on the crude oil, and which had like a god candle for Friday. But overall, markets were jittery around what the heck is happening, how far will they go, how long will this last? We don't know. It's As of now, it's just escalating, and this is like changing on minute by minute basis or hour by hour basis, because this is happening live as we speak. So things could change, after our session, but right now, it's a full-on war between two countries. And so far, United States has set out from a direct participation, but what US has made it clear, saying if Iran will be attacking, we will protect Israel and other US interest in that region. So basically that means helping Israel with Iron Dome and all other technologies to shoot down the missiles or the drones that are raining from Iran. That's where the situation is. But not everything is bad in the markets. We also had some good news in the market, which was around the inflation numbers. So we had inflation numbers that came out. CPI, it grew, but grew lower than what was expected, 0.1% month over month, and the expectation was 0.2%. Overall, year over year, it still grew 2.4%, versus expectation was 2.5%. So we are inching closer and closer to Fed target of 2%, but we'll see. Not there yet. Core inflation, which exclude food and energy, was up 2.8% versus 2.9%. Fed wants to focus on this one. And also later on, we got a PPI, which is producer price index, that grew 2.6%. Generally, PPI will be the leading indicator, right? If the manufacturers are seeing increase in the prices later on, once they have the finished goods out, they will probably pass on, unless they want to ding their own profit margins, they will pass it on to consumers. So good to see that the PPI is also stable, and it's only at a 2.6%. First half, if you look at this graph, at some point of a time, we had a CPI, at 9%. That was 2022. From 9%, now we are talking to 2.4%. Right. So that's a good part. And administration, did not wait a second before taking credit for this. Scott Bessent was in front of Senate Banking Regulation Committee, and was answering questions from senator, and he left no stone unturned in praising because the inflation data came out the same morning, and he was like, look at the administration policies, right? We have been able to bring down inflation to 2.4%. But before we go and celebrate, we should still know that the impact of tariff is not yet shown here. Right? Um, Largely because number one, the tariffs have not been implemented yet. We have a 90-day pause. Number two is companies generally will have a inventory, for 2 to 3 months. So they can still serve from their inventory. They will still be able to, won't see the impact of increase in pricing just yet. Right? So the expectation is we may have to wait until the end of summer, maybe start of fall, to actually see the impact of tariff. And at that point of a time, right, maybe September, October, if we still see that inflation is lower, then yes, maybe administration has done a good job. But I think it is too early to celebrate and give all the kudos to administration on reining in inflation just yet, because we haven't seen the impact of the recent policy changes. Now, as of now, today, no one knows what the impact of tariff would be, right? We are at a 90-day pause, so we don't, which will expire in July, and then we'll see, is it going to be 10% across the board? Which countries will negotiate with us? We had China and US tariff discussion on Monday. Nothing much came out to be. I mean, I think the only thing that noteworthy that came out of that trade negotiation was China will supply us with sorry, not rare earth metals and minerals that we need for our semiconductor and our automotive industry, because without that we just can't function. And China has the most share of those rare earth minerals in the world, and almost 90% of the refining happens in China, right? So we have no leverage over there, and there was a little give and take, but overall, I don't think beyond that much was accomplished. It was all we had met earlier in Geneva, and we just reiterated that we're going to respect what we had discussed in Geneva, and hopefully, if I don't know what US side would be, how much we're gonna relent on the semiconductor AI chips, etc. But if we, dial back the restrictions on NVIDIA chips to be sold to China, or dial back on the restrictions on advanced technology machines, which currently US has export restrictions on to be sold to China, then some of the semiconductor companies should do good, right? Focus on maybe SMH, right? If you don't want to pick up individual companies, SMH is a semiconductor ETF, so keep an eye on this one. Or otherwise, if NVIDIA is allowed to sell, may not be the latest Blackwells, but maybe let's say H100 chips, that itself should bode well for NVIDIA. In the recent announced quarter, as you would know, NVIDIA had taken a charge of $4.5 billion. And overall, if I recall correctly, Jensen had mentioned the impact could be as big as $8 billion, right? So if they are allowed to sell the chips to China, if the restrictions could get lifted, that's a few $1 billion of upside there for NVIDIA, right? The other ones, I mean, similarly, the design software companies, Cadence, Synopsys, lithography machines, ASML, which cannot sell its EUV machines to China yet. If some of the restrictions get lifted, maybe those companies might do good. But if you have not reviewed the companies or don't understand the individual businesses, maybe look at some of the ETFs. SMH is one big ETF. There are other ETFs also related to semiconductor. Um, you can look on that one. So Alfred, yeah, if you have anything to, yeah, you can put in the chat. I am watching it. Hello and welcome. Okay.
Thank you.
So, yes, other thing we talked about was the strikes between Iran and Israel, which we saw that oil had spiked up. And there's a chart from Bloomberg. We had a look at a crude futures. We had kind of a God candle on the crude futures. I think the futures were up, and then the oil US was up like 5, 6, 7%. This was, if I recall the headlines correctly, was the biggest one-day gain in, I guess, 5 years. Right? And anytime we see uh, these uncertainties, the Middle East, the crude will or the oil will jump. So if you had oil in your portfolio, that part probably gave you some cushion on Friday where the rest of the market sold off. Right? And so look at a USO, which is US oil ETF. We had some decent jump on that as well, right? Uh, it's up 4.28% from negative of 3%, so almost 8% jump on USO. And also we saw a good jump on gold. And gold has been one of the, I would say, the best performing asset over the last 2 years. 2023, yeah, I would say from mid of 2023, it have had a spectacular run over the last 2 years. And now, given the fact that there's geopolitical uncertainty, um, central banks and the other countries, some sovereign wealth fund, they go towards gold. Gold is now become gold has toppled the euro to become the number 2 reserve asset among the central banks across the world. The number 1 is still US treasuries. Most of the central bank still hold US treasuries as a reserve asset. And then number 2 used to be euro, but over this week, gold has become number 2. So if you
Vivek?
had gold, congratulations. Yeah, go ahead.
Yeah, regarding oil, gold, and one other asset, that you're quite right in pointing out those as protective with mega profit potential. But there's one other one, and somebody keeps trying on chat to let me to give him the link, which is deepcaster.com. It's very simple, and they give you those oil, gold, and then one other one which has mega 100% profit potential. Deepcaster.com.
Cool.
Okay,
All right.
thank you.
All right. All right. Sector wise, overall, S&P is still up for the year, close to 2%. Oh, I think I do have a chart. Yeah. So let's look at this chart. Yeah. So overall, white is S&P close to 2%. Energy, well, after this bump, is now actually just evened out for the year. Industrial is done the best, almost close to 9%. Worst ones I see are the discretionary, which is like still on negative. And yeah, healthcare is still negative. I think the UNH is dragging that down. And the best performers are the ones that did not work in last 2 years, as good as the technology and the communication sector. So we got on the top, we got industrials, we got utilities, we got staples, right? But I think if we have inflation under control, hopefully we'll see what happens after, because now when the inflation number came out, market was suddenly optimistic, saying now the Fed will have no reason to keep the rate so high. And we saw Donald Trump already came out that he wants 100 basis point cuts. He can ask for whatever he wants to. But now with this tension in the Middle East, with the oil pricing going high, and oil crude is basic raw input into our economic sector. And if oil stays high, it is going to raise the cost of producing everything. So now the bets are off in terms of how many rate cuts we might get this year. Earlier, um, the talking heads were projecting maybe 2 rate cuts by Fed before the end of this year. Now all bets are off. So now we have a higher oil prices, and then we have yet to see the impact of the tariffs. So I don't know how much of a rate cuts we may get, but maybe 2026 probably might turn out better. I'm still expecting maybe in 2025 we will have a little more uncertain markets, little more volatile markets, maybe sideways markets, but 2026 the things that are yet to show up in the markets is deregulation, right? If this reconciliation bill gets through, then we will also have the continuation of the tax cuts, and then finally the rate cuts from Fed, if happens, maybe later during second half. So these three are the tailwinds. Headwinds are inflation numbers, either because of tariff or because of this conflict. So we'll have to see between these three tailwinds and the headwinds who wins, and based on that, we'll might say 2026. So I'm looking more around 2026 where we get a little more clarity. 2025 maybe sideways. Who knows? Fear and greed index, we are looking, overall, the investors are still, I thought at least we may be on the neutral side, but I was surprised to see CNN still at a greed side, right? So that's overall at a higher level picture on what's been happening at a macro side on the market. Volatile, little uncertainty in the market. So let's now look at how do we navigate these uncertain markets, right? If you're starting to get into investing, Jenny, and you're looking at all these news items, you don't know what might happen, right? And which is always a concern. A lot of folks, I think especially this year, generally people have FOMO in a bull run, right? And they will want to invest in because everyone else is making money. Now this year, a lot of people have uh, what's called FIGO, fear of getting foggy, fear of getting in, right? Because the market has already been up 25% from the April drawdown that we saw after the tariff. And now some of the folks are also getting of, should I get in now? It's already up like 25% in 3 weeks, or sorry, in 8 weeks, right? So some of folks are having foggy. So these are uncertain times. So I thought maybe today we will also have a part of our discussion focused on how to navigate these uncertain times. If we are going through that uncertainty, which is perfectly fine because that we all are humans, and I don't think there's any investor who would say, "Oh, it's a roller, it's a smooth sail for me." Especially this year and with this administration, we look at the markets ups and downs. We have had too much to stomach. So let's focus on how do we navigate these uncertain markets. First thing that I always want to focus on is emotional readiness. Right. Over the years, what I've realized is forget about finding the great investments or forget about, oh, I don't know which instrument to pick for investing. Uh, there are that stuff is easy. Even if you don't know how to evaluate a business, you can invest in overall stock market, you can invest in top 500 companies. There are ETFs available. If you want to invest in international market, there are ETFs available. You don't have to hunt for, if you don't want to, you don't have to spend a lot of time. But what's most important is, are we emotionally ready to be in the market or not? Because these are the times when the market goes up and down, and we make the worst decisions for our portfolio. Right? This is the typical investor reactions. Right? When the market is going high, the returns, when market is doing some good returns, we have optimism. Everyone wants to look and say, hey, you know what? I want to invest in the market because markets are going up. And at the euphoria wherein you say, maybe I should. And I have been through these. I've seen people making the mistake in 2021 on taking loans on their credit card and then investing in the market, or taking HELOC on their home and then investing in the market because everyone was making money in 2021. Right? So that was, it was a euphoric market. That time we feel, oh, I should have invested more. I should have borrowed money and invested. And then when the market starts to not doesn't look that great, we saw that in 2022, you know, people become very cautious. They pull away from the market. You don't want to invest in the market, and then you basically surrender, saying it's not for me. Right? Markets are, it's a gamble, right? You can never tell what happened in the markets. Oh, it's not for ordinary people. It's only for professionals. Wall Street screwed me. This fund manager screwed me. XYZ. Oh, I believed Kathy Wood, and now you can put all the blame on Kathy Wood or Tom Lee or pick about whatever, you know, financial advisor or finfluencers, right? You follow someone on Twitter, you follow some services, and then say, oh, they suggested these stocks, they ripped me. But I don't ascribe any of the things that are happening to my portfolio to anyone outside, neither should you, because no one is forcing you to press the buy or sell button. It's your own emotions that we all become slave to and do the stupid stuff. And we end up buying when we should not, when the markets are at all-time high and companies don't justify valuation. But you'll see someone on Twitter talking about, I made 300% in this particular XYZ company, or I have had a consistent return. You never know what returns they had, right? And you end up buying that, and then the stock falls down, company falls down because the business never was good enough to justify valuation. You end up blaming the other people, right? Remember, they did not press buy button on your behalf. So don't complain about the market. Don't complain about anyone else. Because
Vivek,
you can't control the market. It'll do no good to you.
Vivek, you were talking a lot about Mercado Libre, and I eventually bought it, but I'm not going to blame you. It's only gone up. Even if it got down, it's my fault.
No, I mean, again, you should not buy it because I bought it. You should buy it because you are buying into the business of Mercado Libre, right? I always come and talk about why I'm interested in this company. And if you think that thesis is okay, yeah, go ahead and you can buy that company, right?
See, Vivek, people in America don't take responsibility.
Yeah,
You
that's
know,
what I hate, especially in the markets. I think investing has taught me you got to take responsibility for your own portfolio, right? Don't complain about the markets are volatile. Don't complain about what's happening in the market today. Don't complain, oh, Donald Trump screwed me because in April it went down. You can't control it. It's not going to help you. Only thing that you can control is how you respond what happened in the market and what are you going to do with your money. So only thing I'm going to talk about it, not that what's happened in the market, what my reaction should be. Now the markets are becoming uncertain. We don't know what could happen on Monday. Right? Today, early morning, we saw, at least whenever going through the news, a lot of the war has escalated. So anything could happen on Monday. Right? Now, I'm not going to sit here and complain on, oh gosh, obviously, if the market goes higher, no one would complain. But there's a chance market will also could go down, right? 1%, 2%, who knows? Then, but I can't sit and then complain about the market, right? Because that's not going to be helpful. All I'm going to do is look at what my portfolio holds, and then how do I either protect or diversify. Those are the few things I'm going to talk about, right? Because what's going to happen in the next 2 days, 5 days, 1 year doesn't really matter. Because time in the market is not important. It is more important, and timing is not important. So over the 95 periods of 5-year rolling, right? From 1930 to 2024. Pick any 5-year rolling period. SPY has returned, and I'm talking about S&P 500, right? I'm not even picked up the best companies in the market. This is the top 5 companies you can invest in by buying SPY. This is what the most passive investors should do, is buy the best companies and just SPY. 5 years, you have a what? 87% of the time, market has returned positive. And in some cases, like you got 5-year returns are as high as 35%. Right? So if I'm not going to sit and worry about what's going to happen to market next week, next month, or next year, right? When I know that I have a 87% probability that 5 years later it'll be all better than what we are today. If you extend it to 10-year, it's 95%. Extended to 20-year, in the history of US markets, we never had a 20-year period where we have not made money in stock market. When I say stock market, SPY. Now, if you get into Clover Health in 2021, or DocuSign, or Teladoc in 2021, and now you're down 80%, 90%, that's different. Here we're talking about SP 500, which is the top 500 companies, representative of majority of the market in US. Right? We never lost money in 20-year period. So if you are just starting your investing journey, right? For my kids, all her 401k, I helped her select her 401k, and I told her just pick the closest one, which is to S&P 500, and a little bit on the international markets. Right? No individual stocks. And she said, Dad, why don't I pick like XYZ company? Can you suggest me? Of course, she can't do in her 401k, but in her Roth IRA, she says, can I pick some company? I said, if you have a time to follow the company, go ahead. Right? I only have ETFs in her IRA. I think I had a Disney because she liked Disney, kids. So, okay, add some little bit Disney. They use some Apple product they had. I don't think you have a Disney anymore, because when I sold off my Disney position, I cleared her portfolio also. Like 90% is ETF. And because, for my kid, it's like a 40 years ahead of her. I don't have to worry about what will happen in the market in next 1 year, 5 year. Right? So depending on how long do you have a time horizon, there is no reason to panic. Another chart. We are not in a bear phase yet. I mean, we just came out of a bear phase. But even if market goes into bear phase, historically the bear phase lasts for a short amount of a time, and then the bull lasts for much longer. It goes down faster. Market generally goes down faster than it goes up, but it goes up for longer period of time. So eventually the net impact is that over a long period of time, markets have a much decent returns than the cash or whatever you want to hold in your bank, which anyway don't give you anything. So don't be surprised. And it's not easier to go through these downturns, because when you see your portfolio down 5% in a day, it's never easy, right? But market goes down in elevator and goes up in escalator. And you need to understand it. And this happens always. This is nothing new. It's not because you have just come in the market and hence the market is punishing you, or hence the market is more volatile. It has happened for decades. It will continue to happen even later on in after decades, after I'm gone. This is how the market just behave. We just need to know before we get into the market this is the normal behavior. Right? And then how do I stay invested? How do I participate in the behavior is up to me. This is a price that we have to pay to get extraordinary returns. Otherwise, 1% return on a deposit probably is good. You can sit in your bank. So don't put all or most of the eggs in one basket, because in these uncertain times, some of the sectors will get impacted more than the others. The high growth sectors, high growth companies which don't which generate profits later down the cycle, later years, they get impacted a lot more. Okay, so yeah, now this top row basically shows what kind of a stocks had returned the best for the particular year. Last 2 years, large cap growth, right? Max 7, the stuff that we talk about, large cap growth companies had the best returns. 2022, we had a bear market. We had the markets were down 18% SPY, and the worst performing were these big mega cap tech stocks. QQQ, representing Nasdaq 100, was down 40%, close to 40%, right? But the value stocks did better. I mean, it was down, but less than the rest of the market. 2021 was a mid cap, right? So make sure you have little diversity in your portfolio. For example, on Friday, if all you had were the tech companies, Nasdaq was down the most of all the three indices, right? If you had a little bit of an oil, you had a little bit of a gold, you were a little protected, right? So make sure you have a little diversified portfolio, US, non-US, different asset mix, because anytime these the fluctuations that will cover your portfolio, uh, depending on what kind of portfolio you have, you may be more or less impacted, right? Now, what could also happen, which probably has happened with my own portfolio, is over the last 2 years, since the tech stocks have grown, or the mega caps, Mag 7, mostly to the tech and the communications, that have grown much more than the rest of the markets. Suddenly, the portfolio become much heavier on the tech side, right? So you need to be aware of, oh guys, I have so much of a tech exposure. Am I okay with this or not? Right? What if the tech sector goes to another downturn of 10%, 20%? Right? That's where then you need to start looking at how to rebalance this. So we'll talk about rebalancing, right? So make sure first you have a diversified portfolio, and then review your portfolio periodically to make sure it still gels with the diversification that you want it to stay with. Because given any one particular sector, or a stock going higher, it could just skew your portfolio. It will change the mix of your portfolio. So reconsider your mix. You have a stocks, bonds, cash, how much you want to hold it. Like I was telling even the previous week, over past few weeks, saying I'm not looking to buy anything more related to AI. I'm okay to hold more cash in my portfolio. Right? Some of the covered calls that got assigned to me, I'm like, I'm holding that cash. I don't want to buy more on the tech side right now because I'm already heavily exposed to tech. If tech goes high, will I lag little bit on the market side? That's okay, because I already have had enough of the tech in my portfolio. Right? You identify what's good for you first at an asset class level, then within the asset class, if you okay, I want to have everything in a stock, fine. Then what kind of stocks you want to have, or have a mix of stocks, bonds, and the cash, right? Then you can find out, okay, what do I, if I'm buying stocks, what do I want to buy? Big company, small company, growth versus value, which sectors I want to pick up. Do you want to get exposure to international? Because what if overall the markets are saying that the dollar may not stay as strong? And then in that case, the international markets will do good. This year, last week we look at the chart of how the markets across the world have performed. European market, which have lagged US for last 10 years, was up more than 20%. I think it was 27% year to date. Whereas in the SPY is just up 2%. So like you have a 25% differential in European market. US was like fourth or fifth best market, right? There are some of the international markets have performed much better. Right? So if you have had some international exposure, that would have given some more green color to your portfolio. So, and if you are holding bonds, you need to know what kind of a bonds you want to hold. You want to hold corporate bonds, municipal bonds. You want to hold, government bonds, which is T-bills, T-bonds. What's the maturity you want to hold? You want to hold a shorter term maturity, or you want a longer dated bonds. Longer dated bonds are more um, exposed to your interest rate risk. Look at what happened to TLT over the last 2 years. TLT is 20-year plus yield bond, and ever since Fed had decided to increase the interest rates, started increasing interest rates in 2022, right? It has just lost its value because increasing interest rates have a much higher impact. Longer the bond maturity duration is, more is the impact of interest rates. So now if Fed starts to reduce the interest rate, you would see more positive impact on the TLTs than, let's say, the S bill or the 3-month treasury bills. So you need to determine how, and many of the smart money learned this lesson by going bankrupt. Silicon Valley Bank, right, was one. Uh, there was other bank which also went. I think First Republic. Even prior to that, there were some bank that were taken over by FDIC. It's not because the banks were they didn't have money. They had a treasury bonds, right, which is considered to be the safest asset. But the bond lost so much value on paper that their balance sheet was upside down. Even the highest paid CFO just missed out on interest rate risk and how it could impact their own balance sheets. Right? So understand that. If you want to invest in corporate bonds, you need to know what's the credit quality. Do you want to invest in the highest rated corporate bonds and be okay with a little less return? Do you want to go towards the junk bond, high yield junk bond category? You can get more returns. I think that the average high yield bond ETF probably giving 7 to 8%, which is like a stock like return, right? But then you have a little more risk of some of the companies defaulting, etc. So when you stock, you focus on business fundamentals. When you're buying a bond, you focus on credit rating and the duration, right? Ashwini says 20-year rate is generally independent. I agree. Fed only decides the overnight lending rate, but we do see that sometimes the rates tend to move in the same direction. Yes, Fed doesn't decide any of the rates. Fed doesn't decide our mortgage rate. Fed doesn't decide the auto loan rates. But based on the Fed rate directionally, the other rate starts to move towards that direction. Right? So technically, yes, you're right. Fed doesn't decide these rates. But if I know that the interest rates are, if the cost of borrowing by the banks for the overnight lending is low, then they will be able to provide loans to the corporates and individuals at lower rates. Hence the directionally it moves in same direction, but you're right, it's not, Fed doesn't directly decide any of the rates. And we saw the surprise in September. Fed actually cut down the Fed rates by 50 basis points, and the mortgage rates have gone higher because the markets didn't follow the Fed direction. But generally, this is what will go towards. We talked about rebalancing your portfolio, right? If your portfolio has shifted away, let's say you had a stocks started with a 65% stock, like traditional 60-40, 60% stock, 40% bond, and now the stock market has worked so well, that your stocks have become now 90%, maybe you need to think it because the risk profile of your portfolio has changed completely. Right? Okay, so look for an opportunity to rebalance your portfolio. Know your risk profile more than the market volatility. We tend to focus more on what's happening in the market, and I think I've learned that it is more important to focus on myself, right? How do you keep a cool head? How do you make sure that you don't get scared when the markets are down during maybe the tariff times, right? And have not moved into cash, because that would have been the worst mistake. During the first week of tariff, when on second or fourth, the liberation day, and in next 3 or 4 days, the market was down like 20%. If you can't control those emotions and you had sold your portfolio and moved into cash, you'll be kicking yourself right now. Right? So understand your emotion, and it's perfectly okay. And if you say, you know what, I can't see my portfolio going down 20% in a week, maybe don't log into your brokerage platform. Or then don't invest in stock market. Maybe pick some bonds. I mean, in fact, bonds will also had fallen down. I mean, we had a time when the bonds were down, the stock was down, and the dollar was down. We never have had, some of these things that happen altogether. Then stay in the safer instruments. Right? You need to understand your comfort level with the risk. Good. Only then you will be able to have success in the market, while your rest of your friends probably still could make money because they were emotionally able to go through this roller coaster, and you might still lose out because you did not know yourself, because you focused to know everything about the market, which is a mistake that I had done during earlier part of my investing career, was focusing a lot more on the market than trying to understand me in term and what do I want, how do I want my investments to help me out, right? Which one thing which I realize is I don't want to focus always on the highest returns, right? Which might sound a little stupid or absurd, saying if you're investing in stock market, why would you not want the highest returns? Because to get the highest returns, I have to take an equivalent amount of risk to get those returns, and which might cut down my longevity in the market. So instead of me trying to get the highest return every year, I'm okay with a nominal return for much longer period of time. Right? That's just me. That helps me to sleep well, and helps me to stay longer, in the market and not get scared by what's happening in the market in the short term, because then I will choose investments accordingly based on how I am as an investor. So you need to understand you as an investor. So that is the toughest question for me to answer when I meet someone else and they are asking question, okay, what we should invest in the market, what's the best company? I'm like, it's the best company for me, but I don't know if it's the best company for you to invest in, right? So, because I don't know about you, that's only you know about you. You should review your safety net, especially when it's an uncertain market. Uh, Make sure you have a good amount of emergency cash reserves. So, if you been attending these sessions, those who have been here for much longer period of time, and in time and again, I'll do that basic investing 101. Right? For me, you got to keep at least 6 to 9 months of your living expenses in cash or cash equivalent before you try to invest anything in the stock market, right? So if you're now, some of you are new, if you are starting your investing journey, it is because markets are done great for last 2 years. Make sure you have a 6 to 9 months of your living expenses. I'm a little more conservative. I actually had kept a year before, I became a lot more, um, before I learned a lot more about the markets. I had a lot of buffer. What that will help you is to navigate through these turbulent times. Right? Keep 3 to 6 months. If you're a salaried one, if you're a retired person, you need much longer cash reserve, maybe 2 3 years of a cash reserve, because you don't have any income coming in, and it's a pretty average to have a bear market in 3 years. Even for a 5 year, we have a 13% chance that the stock market have actually returned negative. 13% chance. It is a chance. 13%, right? So if you are retired and you don't have any other source of income, you need a much bigger cash buffer. And we could keep it on your high yield savings account, in your CDs, in your money market fund, something that is readily accessible, right? And if you're in an unfortunate situation where your cash runs out, right? In that case, maybe you have to. I don't focus on these ones because I don't want to be in a situation where my cash runs out. But in case, then maybe you look at home equity line of credit, not to invest in the market, but to have your cash reserve. I am not a fan of taking HELOC and investing in the market, or taking your or doubling down on mortgage and investing in the market, or taking loan on your credit card account and investing in the market. Right? I don't do that, and neither should anyone who wants to be long-term investor in the market. Don't raid your 401k plan. Don't unnecessarily stop your compounding. Look at other methods in which you can raise cash for a short amount of time to get through this period. Okay? And grow your safety net. Maybe look at your budget and cut down on your budget. Right? Maybe you have a 7 streaming subscriptions. Do you need all 7? Maybe get rid of a couple of them. Right? Finally, last one is money is actually made in these downturns. We just don't know it. The best stocks that have performed this year are the ones which I bought during April 7th. Because those stocks are all up. Even SPY is up 25%. So the portions of SPY that I bought at that point of a time has returned me the most. It is a very difficult decision, but that's where you sow in the seeds of the growth that you see in later. So the money is actually made when it's in the bear market. You only will realize it when the bear market is over. That's when you discuss, damn, that's the time when I made, the investment that I did. That's made the most money for me. Facebook that I bought at close to 100, I didn't time it exactly at 88 in 2022, has returned me the most. Now the Facebook has like 700 plus. Right? Mercado Libre, when it gave me like November, you had an opportunity to buy it at 1700. When the stock was punished because of a short-term analyst only look at next quarter or next 6 months. And if you can look beyond that, you get these opportunities. Now the stock is at what, 2600. Right? So the things that you buy when everyone is trying to sell, because the company is good, or if you have a longer time horizon than the Wall Street firms, you can take advantage of those weakness in the bear market. And that's where the dollar cost averaging is simply that concept. Don't try to time the market. Saying, okay, now the market is going down, I'm not going to invest and I will wait. Then you will just be waiting and never be able to invest. So if you continues, you get your paycheck, goes into your 401k, just don't stop it. Just continue buy it every 2 weeks. And if you now go back and look at whatever you bought near the April 2nd week, you will realize, that's the best asset growth that you have seen in your portfolio. Right? But you will realize it now. At that time, it looked really, really bad. It's really difficult. saying, why I'm putting money in it when it's down 20%? Why am I buying this one? Right? We don't know. We don't know what's going to happen to the markets in next 1 year, 3 year, etc. Yeah, I just talked about it. SPX has rebounded 20% since its April low, right? And now we got the geopolitical tension going on. So let's look at historically how the market has performed. Right? Every time we have unrest in the market, we have a risk of sentiment globally. So we saw this risk off on Friday. Probably maybe Monday we might see the similar one, risk of sentiment. Uh, but they always have a short-lived impact. And this is the chart, the table. I think I've shown it earlier also, but probably good to review this. A lot of invasion of Kuwait, Iraq oil export halt, Venezuela strike. These are all related to the oil shocks, right? Sure, S&P on that particular day, except the Venezuela, I think all probably negative. But what happened to the market since then? It's all fine. Like 1 year later, except 2001 because we had the dot-com burst. Other than that, it's pretty good. So I don't have to worry about what's happening or what's going to happen just on Monday. Right? If the markets are bad, that's fine. So these geopolitical tensions always have a short-term impact. At the end of the day, as a humanity, I don't think we want to kill each other. I mean, if that's the case, if we get into a hot nuclear conflict, stocks will be the last thing we should be worried about. We have a much bigger problems to handle, right? So, and so I don't think we'll reach at that point of a time, at that stage. And if we don't reach at that stage, we'll be okay. I mean, we had a Russia-Ukraine war in 2022. Markets are up, what, 60% since then? Did market sell off during that war? Hell yes. Market did sell off just because of impact of a war, because a lot of commodities come from that area, agricultural export happened from that area, but then we adjusted. So I don't think this is going to be any different, even though for a few weeks, maybe for a few months, situation might stay volatile, but eventually we will come out of this. We have always, humans. I don't discount human ingenuity. Right? So that's few of my thoughts on how do you navigate these uncertain times. Summary is don't make any drastic changes. Only thing is if you have not rebalanced your portfolio, maybe you want to look at that, which anyway you should do it regularly. Not specific because of this, but it's just a reminder that if you're still holding everything which is high growth, and if the markets say uncertain, those are the companies that get impacted first. Okay. But if you still have investing for, oh, I don't need that money for next 10 years, then should be okay. Shouldn't be any issue. All right, let me go through some comments. Jessica. Oh, sorry. Ashwin says VIX greater than 35 is best time to buy a call. I'm not sure if buy a call or buy a stock or sell a put, but it is best time to get bullish on it, right? When talking about buy a call, etc., then you also need to know how much you are paying because VIX is all-time high. But that's a good time to maybe get bullish on it. Jessica is saying, I'm completely new to investing. How soon do you think stocks like SPY will begin to go down since it's been going up based on my experience? I don't have a future, the ball. I don't have a crystal ball to gaze into future. So I don't even want to speculate what might happen to SPY. And, I would be failing uh, in failing myself if I now started saying, I think SPY will go down next week. Maybe on Monday because the markets are still the war has the tensions and the war has gone worse today. Maybe market will go down. Who knows? Maybe on a Monday morning we'll see some truths, then the market could go up. Who knows? I don't have a crystal ball, and I don't want to invest in a way that need me to have a crystal ball because no one has it. If anyone can say, if anyone is telling you that I think the SPY will go up or down, they're just lying. They're just not being honest. Right? So I don't know where the market will go down. And never try to speculate about what the market is gonna do in next 1 month, 6 months. And I don't invest based on that. Sorry, I can't answer that question, but that's the honest answer. Fred says, did you ever do a session on Tempus AI? Nope, I did not. But I know this is what Nancy Pelosi stock, right? I've not reviewed this company. So you're going, I already have a queue of Chewy, Lamb Research, and then I'll add Tempus. All right, buy, sell, nothing. I didn't do anything, no stock buy or sell this week. Again, this is not a recommendation. If I buy, you should not, but I want to be transparent on what I bought. So like I talked about Facebook. So if you go on that session, I would have told you that I bought Facebook this week, right? It's not that now I'm telling you I bought Facebook in 2022 after the Facebook has gone up. I bought it, stuff gone down. That's fine. It is what the market is. And you're not going to make money in every stock. The best investors are right max 60% of the time. So 40% of the recommendation from the best investors turns out to be wrong. I mean, I thought this company is great, stock will make money for me in 5-10 years, probably doesn't make. So if you are getting 60% of your thesis right, you are one of those super investors, like of the likes of Charlie Munger and Warren Buffett's. Most of us are, and most of the money gets made only on 5 or 10% of the stocks that you own if you held them for a long time, right? Those 1 or 2 stocks, let's say if you had held Amazon or Netflix along with all the other stocks in 2000, every other stock in your portfolio has gone to zero. Still these 2 stocks would have made a lot more money for you. So there's I think it is true, is in 1960s or 70s, we used to have the Nifty 50s in US, right? Top companies. We had a company like Kodak, Polaroid, RCA, or, we don't think about those companies anymore. IBM still exists. So there is some discussion around whether Walmart was part of that or not. Right? But let's say Walmart was part of that. Nifty 50, there are 50 stocks. You invested 2% in every company because you spread out your portfolio and put 2% in every company. And you held that till today. Right? I think more than 80% of the companies don't even exist anymore because they've gone bankrupt, got taken over, business model failed, Kodak is no longer there, right? RCS, etc., everything. But still beat S&P 500. Or it still made tons of money because just by holding Walmart. So you could be wrong a lot of percent times, but very few stocks in your portfolio actually gives you the maximum of rate. It's like a Pareto principle, right? 80-20. 20% of the stocks in your portfolio will be responsible for 80% of your gains. Right? So that's why I have a little tough time in now selling the positions because I don't know which could become a multi-bagger later on. I know at max it can go down to zero. If I hold a stock which bought $40, at max I lose $40. But if the business turns around, it could become $400. Right? That's possible. So, so I didn't buy or sell anything this week. Let's talk about the crypto market, right? Top crypto assets. We also saw some sell-off during the crypto during this Friday, but not too much. I mean, if you look at the biggest asset, Bitcoin is still hovering between 100K and 110K most of the time. And that's like a sweet spot. We have seen now it is above 100K. There are some stats around for how many days, and I think that's the maximum number of days that is been above 100K so far. So those who are a technical chartist or believe in these numbers, it says that now this is a new support or new floor. I don't know. And I'm not investing or based on what could happen in this case, next few years, because this is much longer play. Anyway, good news, not a good news, but a big news that came out was Stripe has acquired a company called Privy. And while it may not so look, it might be a little head scratcher to see why Stripe, which is a payments company, is acquiring a Privy, which is a crypto wallet provisioning company. But let me just maybe spend a minute to take you through. I did a post on LinkedIn around why this actually makes sense, right? So I'll just give a link here. If you want to go through the detail, you could, but I'll give you a brief rundown. So Stripe had earlier acquired Stripe. For those who don't know, it's a company which is now behind most of the credit card payment infrastructure. It makes it very easy for businesses to accept payments, credit card payments or debit card payments online. Um, Started by two brothers, very developer friendly interface. They provide an application programming interface, APIs for developers to build apps. So I don't have to worry about making relationships. So if I'm a business owner, I don't have to worry about making relationships with MasterCard or a Visa, so that I can accept the payments. I can just work through Stripe. They are, I think maybe that's now the second or third biggest, most valuable private company. Before the AI and the SpaceX, they were the most valuable private company. I remember at some point of a time its valuation $90 billion. Probably has come down, but still market is waiting for it to come public. So Stripes dominate that part of online providing infrastructure for credit card payments, etc. In February or January, they had acquired another company called Bridge.io, which they now renamed to Bridge. So Bridge is a company that allow businesses to accept crypto payments, let's say stable coins, etc. Right? So you can accept, don't have to just pay through credit card. You can use USDC or USDT. Now these are public companies. Circle is a public company, right? So it will creep into your traditional finances anyway. You can use that to pay for the goods. So they had acquired that company. So now they're starting to move into crypto payment rails. But that's of no good if you don't have a way for users or businesses to help users create a wallet through which they can pay. Privy allows them to do it. It allows developers to seamlessly, integrate the process of a crypto wallet creation onto your website, right? So now with this, what Stripe can do is also allow businesses, say I go to XYZ dot, I can't use XYZ anymore because we have a blog whose ticker is this. Maybe DEF. I have a DE company with a DEF ticker, and they're selling some stuff online, and they want to attract, make a um, enable their customers to pay through crypto through stable coin, and there is a reason which we'll talk next, because now not the fictitious company, we have Amazon and Walmart that they want to pay through stable coin because there are benefits to them, right? Then I go to my user, right? And the user can then provision a wallet, transfer is convert your dollars into stable coin and then pay through that, right? So it'll be much easier for them to overall the user experience will become much smoother, and that means Stripe can also become a much bigger player when the payment through stable coin become a very accepted form of payment, like how the credit card today is. Right? 30 years ago, paying through credit card online, would have given some jitters to those who were trying for why would I give my number online? Similarly, right now it seems a foreign concept, esoteric concept, saying why would someone use stable coin? But if we have a regulations which currently is in progress, if we get all this stuff regulated, I think it'll be a matter of maybe few years that we could have a stable coin payments. We could be paying for the goods that we buy not through our credit cards, but maybe through a stable coin. That's why the Stripe wanted to move in here. And this week, I think was a Thursday maybe, we had a news, or maybe Friday, that Walmart and Amazon are pondering on providing ability to their own customers to pay through stable coins. And that caused MasterCard, Visa, PayPal, the stocks fell down on Friday. So if you're looking at what happened on Friday, among other things, what happened on Friday with some of these stocks is very specific to their business model, which was Walmart and Amazon, two biggest retailers, are exploring alternative way of payments for their customer. Right? So if you, and that means I'm not going to use credit card, then that board doesn't bode well for MasterCard and Visa, right? So we saw Visa sold off. I don't know how much percent was it. Let's say Visa was V. It was down 5% on Friday. How about MA, which is MasterCard? Almost similar ones. And the third one that was down was PayPal. Right? It's down 5.32. Oh, so close to 5%. Because now we may have a competitive form of payments. Right? So why they are looking into this? Because it is a much cheaper form of payment. It is settles much quicker. And, these retailers can basically make more money. They're not doing it just because for a consumer sake, they're doing for their own sake, right? So there's the whole concept of, when you pay through credit card, retailers have to pay an interchange fee to which then get distributed between the bank that issue the card and the payment processors, these credit card networks like MasterCard and Visa, and then there are payment processors. Long back, I'd gone through the whole the flow of how the payment processing happens, but there are a fee that get charged at every step, and that is why the merchants end up paying close to 3% as a fee for us to use credit cards, right? And now if the merchants can save that 3% or a portion of that 3%, that's something which will directly is accretive to the bottom line, to the profits, right? So that's why they're interested in it, right? And then stablecoin settled in a seconds. There's a finality. Today if I go and pay through the credit card on Walmart doesn't get the payment immediately, right? So there is a cycle in which the money gets held on to it, and then don't have access to the customer money. Now with the stable coin, they will get access immediately and all that stuff, right? So, but the idea is, will this be picked up? How long will it take to pick up? Will the consumers be open to this or not? Maybe they'll give you some incentive saying if you pay by stable coin, you'll get 1% off, 5% off, maybe to just make us accustomed to paying through stable coin. But over a long run, this bode well for the retailers, and until Visa and MasterCard figure out how to reduce the cost, it's not good for them. But Visa and MasterCard, they're already looking into, they have a patents, and they're looking into making use of blockchain and use stable coins to enable businesses to move into that anyway. So we'll see. But that was a a good step in legitimizing the crypto economy. This is where you see that there is some stuff which is really happening in it, right? Otherwise, most of those crypto is grift, right? And the scams which you should then stay away from. But these are some real development happening in these ones, right? So not all crypto is bad, unlike what maybe some of the financial media will talk about. How can we invest in this? Oh, yeah, Hong Kong is beginning in September, right? So you need to. I don't look at the Hong Kong market and in terms of who the players are, but at the end of the day, um, again, it depends on which crypto. Are they gonna go and create their own stable coins? Let's say I'm only talking about Walmart and Amazon, right? Or are they gonna use one of these USDCs, or are they gonna use XRP for running this? We don't know that, right? So I would still say if you want to invest in it, Walmart, Amazon, they will be benefited if they move on to this infrastructure. Their profit margins will go higher because they are using this tech. Leslie is asking, can you recommend some good and reliable news channels? Unfortunately not, because I don't watch many news channels. The only thing that plays on the background, and that's especially when I'm making lunch, etc., are will be either the Bloomberg or the CNBC, but I don't recommend anyone watching that, because you should not take anything as a gospel or a truth what you hear in those channels, because people have their own agenda. The fund managers who come out there have their own agendas, and you don't know their agendas, so that you might get misdirected, right? I tune over there is because, hey, I'll know, okay, this is what happened in the market, not that I'm gonna take an action on it, and that is my passive learning. Actively, I listen to a lot more podcasts. I will read a lot more articles. I think I've done one session. So if you just ping me on a meetup, I can send you the um, the link to the recording where I've discussed all the podcasts that I listen to and what are the reasons, right? For knowing the crypto economy, there are a couple of podcasts. For individuals, there are stocks, there are podcasts. For understanding the market structure, there are a few podcasts that I listen to become better at become better as an investor, portfolio management, etc. There are a few podcasts that I listen to. Then there are a few authors that I follow, their writings that I follow. I can share that. I think it'll take an hour to go all through that, so I don't want to do it right now. But yeah, ping me separately. I'll share that with you. Uh, how to value the market? Kai is asking how to value the market, for example, SPY, and how do you calculate the rate of return? I mean, SPY rate of return, the rest of the world will calculate for you. You don't have to do yourself. Valuation perspective, if you are really looking into what's your current valuation or what's your forward, the accepted methods that the market looks at is the price by earnings, like on overall perspective, or maybe you can look at your forward price by earnings. There are other ways you can look at the price by free cash flow, which will give you the free, what's the from a free cash flow level, what's the valuation is. Again, I would want to tell you here. Sometimes when it comes to the individual companies or the markets, if the markets are expensive, sometimes they can continue to stay expensive over a longer period of time. In 1990s, etc., or a few decades ago, the average PE used to be close to 16. But if you had stayed and said, I'm not going to invest in the market if it is more than 16, you would have missed the whole last 10 years of gains. Right? The markets have ever been expensive. Right? Because now the type of the companies that you are coming in the market, or the companies that are dominating the S&P 500, have changed. So I can't use the same logic what I was using in 1980s, when the companies that were dominating the markets were industrial companies, oil and gas companies, Exxon, GE, whose margin profile was different, who needed a lot more investment to generate same return on operating margins, whereas nowadays we have a different margin profile of a company. So you always have to be look for maybe how much is been expensive or cheaper, maybe with a recent history, right? But at the end of the day, you should understand is markets can stay irrational or more expensive longer than you may thought of. That is why I don't try to time the market and say, oh, it is more expensive, let me get out. Individual companies, yes, I will do it, but on a overall market level, if the market goes down, if I'm doing dollar cost average, I buy more when the market is at a reasonable valuation, and you buy less when the market is as a higher valuation. But you never know whether higher is a top or not, right? Ravi, can you please tell me how about silver investment for long run? I think was it last week or a week prior to that? Again, I don't know about much about silver because I'm not a big investor on precious metals. I just held gold in a portfolio just from a diversification perspective. So that has worked out well over the last 2 years, even though gold has not done nothing prior 10 years. But last 2 years, gold has done good stuff. Now, there was an article in Barron's, was it Barron's or Wall Street? I don't know where I picked up from, which I reviewed maybe 2 weeks ago, saying if you feel you have missed boat or bus on a gold, silver will generally follow. Again, that's not my statement. That's the statement of the author. So maybe go and view that recording where they talked about the disparity between the silver and gold. The ratio of gold divided by silver is higher, probably the highest than it has ever been in the history, and generally that gap does close. So if you ascribe to that theory, maybe look at a silver. I don't have a visibility because at the end of it, it's a commodity, right? There is nothing much that you can do in terms of your and I'm not a macro or a commodity investor, right? So now some of the other websites you can look at, I look at, let's say, fool.com to know about the little more um, business of the companies. Investing.com is good. Fred has mentioned my own website. All you get is the recordings of these, and maybe what are the trades that I have done. I do a lot of option trades. You see the history of that. That's all you say. I'm not being great at putting all the content that I discuss here on my website, but I appreciate it, Fred, you giving visibility to my website. But yeah, find what works for you, right? If you are a long term or a fundamental investor, you can look at a Morningstar. It is available for free, right? If you from through your library account, at least in Bay Area, if you have a library account in Bay Area, you can get access to Morningstar reports for free. The best resource will be the company's own website, their investor relations, their own quarterly earnings and yearly annual reports. All right, so let's jump into ARK big ideas, and maybe let's try to cover at least these four, because I think I'll skip the reusable rockets and multiomics because that is too long a moonshot yet. But maybe we'll cover. Let's try to get through at least these two today, and then we'll open up the breakout rooms for any other discussion that you may want to have. Sounds good? Or you think maybe we should skip ARK big ideas? Because that's what are we going to discuss in this is for next 10 year, 5 year, 10 years. There's nothing related to what might happen in next 1 year. So this is for much longer term, right? Secular themes that you may want to look at. All right. so we were, we got to go on robot taxis and autonomous logistics. Robot taxis. We've gone through AI agents previously. So AI is done. We looked at the Bitcoin. We talked about stable coin. See, now the stable coin is becoming reality. This is the closest one. This is the only killer app I see on the crypto side, except the other is a store of value. We talked about scaling of blockchain, robotaxis. All right, so let's look at what ARK Invest has to say about robotaxis. I want to caution you, and the disclaimer that I give every time I talk anything coming from ARK is consume this information from a directional perspective, not from a magnitude. Means if ARK says that it's a $40 trillion opportunity, the takeaway is it's a big market, maybe $10 trillion, right? Because they're generally very, very optimistic about their predictions, right? So think more from a trend perspective rather than an absolute numbers, right? So looking at EV, continue to take share from ICE vehicles, which is true. In China, the NEV or new energy vehicle sales had surpassed ICE sales with the recent reports, right? And we are seeing that the ICE combustion, year over year, those sales are coming down in terms of numbers, whereas the electric, the sales are going higher, right? So it's only a matter of time that we'll have a more EVs than the internal combustion engine. Some of the countries, this is already flipped. Like I said, China is already flipped. There are more new non-ICE vehicles are being sold in China than the ICE vehicles. Right? And then the report talks about that the future is going to be autonomous electrical vehicle. I actually would want to segregate into two separate ones. One is EVs, one is autonomous EV. Right? And yeah, the growth is clear, saying the overall uh, the vehicles have went from a percent perspective, ICE is slowly coming down, and the new energy vehicle, whether it is EV, whether it's hybrid, whether it is a plug-in hybrid, that's increasing. Right? After more than a decade, most automakers have dropped out of autonomy race. That is true. We saw GM pulled out of Cruise, separated themselves from Cruise. We had a Ford separating them from Argo AI. We have Tesla still in the game. Does anyone remember what's the new date for Robotaxi launch? We were supposed to have Robotaxis first in 2017, then in 2019, then in 2020, then in 2023, then finally on 12th June 2025. But that didn't happen. And now we're looking at, I think, 22nd June, somewhere like that. Maybe let's say end of this month. Hopefully we will get Robotaxi from Tesla, right? But on the other side, Waymo has already delivered. We have a Waymo taxis running in San Francisco, now in some areas of Mountain View, Sunnyvale. They have been approved for in San Jose. Now they're also in. I think they're approved for maybe a few more cities. They're also in Austin, I guess. And then Zoox, which is Amazon's, is also in the game, right? So even though ARK Invest, Kathy would like you to believe that Tesla is the only one, but that's not the case. There are a lot of other companies in it. And now outside of US, like in China, they are much more advanced in their so-called robotaxi or autonomous vehicles, right? There we talk about that how cheap it would be cost per mile. I don't think it's going to be that cheaper because maybe just the cogs or the operation of just the robot tax, your EV the battery cost for per mile might be cheaper, maybe cost of maintaining this, but then you have additional costs, right? Your insurance cost of maintenance of a fleet and all this stuff. I don't think it's that cheaper, but I think comparatively it will still turn out to be cheaper. So directionally it's right, but I don't think it's going to be 25 cents. Right? Autonomous ride hail will lower the cost of point-to-point transportation. That is true. And I expect that maybe there will not be any need to own the vehicles. Right? I think I'll still own a vehicle. Maybe the next generation, they can just use their app and just get the taxi coming to the doorstep. Why you need to own the vehicle? Right? I don't own a power plant to generate electricity. I just flip the button. So that will be like flipping a button, just tapping on your cell phone, and you'll have a transportation available. Right? US and China are blazing the robotaxi trail, which is true, followed by Middle East and Europe. That's also true. Robotaxi have hit 12 million rides at an annual rate. Waymo and Baidu are responsible for most of the autonomous rides in US and China. And like commercial rides, they're already happening in Waymo. Tesla and Zoox are not there. Now, I think there was a news Uber has tied up with WeRide. I forgot the name of the company in London for their autonomous EV taxis. So yeah, there's a lot of stuff happening, and this is a potential that Kathy is looking for. For Tesla. I don't know how much of this will turn out to be true. I just want to see one robo taxi first. The research suggests that robo taxis will have scaled to roughly 50 million globally, with Tesla capturing 50% of market share. So you can maybe take a zero off it, or maybe tone down this number. There is intense competition in China for this, and I think even if Tesla get 20%, there will be gonna be intense competition in US as well. So while you get a market share, you may not have the same economic benefits that they might be projecting. And now they're talking about 2030, which is what, 5 years out, right? So yeah, these predictions are pretty optimistic. Autonomous could rapidly shift vehicle mile travel to electric. We already talked about it. Suggest that 50,000 robo taxi is possible. Yeah, we'll talk about it when Elon delivers that. I'm still waiting for 25K vehicle, which he talked about delivering last year. Tesla cost per mile is 30% lower. I don't know. Then Waymo's, we have to see once the robo taxis start to come on the market. Right. Autonomous ride hail should reduce the cost, including deadhead miles. Deadhead miles are the number of miles driven without passengers, which is account for 45% of the ride hail miles today. I don't know how the autonomous will reduce it. The software could do the routing properly, but whether it's a human driver or whether the car is driving by itself, I don't know how the deadhead miles could be reduced. Expects the autonomous software to outperform human drivers on safety. I agree with that. And ride hail could create a $10 trillion market. It's a TAM, not our overall revenue. We'll have to see how much revenue could get accrued to any of these companies. We still don't know how much of the Waymo, how much money does Waymo makes, and Tesla anyway doesn't make anything. Robotaxis could generate $34 trillion in enterprise value. Ignore that. Numbers are too big. But the fact is that all they're saying is Tesla's valuation. One big part will be these robotaxis. Right? Now they are talking about all the combined $34 trillion in enterprise value. What portion will come to? First of all, what the real number would be? Maybe it's 2.6 trillion. If you're looking at looking at, let's say, 5x EBIT, or if you're looking at 15x, maybe 33, but it's too optimistic. More important, interesting autonomous logistics. autonomous vehicle that could roll and fly could lower the supply chain cost. Haven't seen much traction just yet on this one. Right? There have been talks of this for a few years now. We had auto moved into this, and then I haven't seen too much just yet. Right? So we're looking at these three robot taxis, robot trucks, and the drones. I see a lot more chatter around the drone delivery than the autonomous truck deliveries. Right? So maybe we will have a drones coming sooner than the robot trucks on the road. Again, this chart shows you the technical regulator partnership, the different levels of how you can view the progress of these technologies. I'll skip that. Logistics drone companies are beginning to break through regulatory barriers. Right? So now we got a Zipline, which is the biggest one. Right? Cumulative 100 number of commercial flights. Zipline has done more than 1 million, mostly US and Africa. Wing, which is Google's, is number 2. Right? And so don't write off Google just yet because ChatGPT has taken its search business. They got a Waymo, they got Wing, and the third one that you could recognize, Amazon has got a Prime Air, which is again very small, right? Then the rest one are in US and EU. I've not heard about Flytrax. I heard of, okay, which one is the food delivery business, or now I should say e-commerce because they're trying to move into the other areas also in China. So that's on the logistics drone autonomous trucking. I'd never heard of this tech company before. It's from China. And they just start, it's a pretty old company, 2018. Right now they're level 3, L3 level, which is bigger than where Tesla's FSD is. And right now they're testing on L4. So, and then these are some of the other companies. Pony AI is again Chinese company on the autonomous trucking. So keep an eye if you want on Inceptio technology. They seems to be the leader in this. I've never heard of this before. Right? If there's a way to invest in this, if you invest directly in Chinese or Hong Kong market, maybe they're publicly listed. I've not done. I'll not look deeper into this one because I know they are not on the US market. So robot delivery companies with broad-based experiences should be in a superior competitive positions, right? Then these are some of the companies which will have a sidewalk robots. You'll see. I've seen some in Mountain View. And then of course those are all experimental. They're in a testing phases. I've seen some in the UC Berkeley campus, but there are in China robots are a commonplace. Right? So, like I said, they are building from scratch. It's much easier. They're much Chinese. China is much ahead in EV game, autonomous robot, and these robots, etc. They're far ahead of us. Right? Autonomous delivery revenue could approve a $900 billion. I don't know. Maybe take a zero off. US needs a low-cost AI-powered aircraft, which I agree. And the recent happenings with Ukraine and Russia, where Ukraine had used drones to kind of cripple Russians' air force, and they use all those like cheaper drones, and those couple of thousand, or maybe $10,000-$20,000 drone were able to basically render a few $100 million or maybe tens of millions of dollars aircraft, right? Useless. They just went and bombed them. So we have to figure out a way to how to make this AI power to basically get a low cost aircraft or low cost um, weapons that can fly. So if you are shooting down 50,000 one-way drone with a $3 million missile, that's not a good cost equation. And that's exactly the Anduril use case. Still a private company, but this week in an interview, the CEO, Lucky Palmer, said that they do want to go public as soon as they can. So they have a very strong use case on reusable kind of a missile, etc. So basically, it's a low cost to weapons to basically fight against drones, right? And in this recent conflict between Iran and Israel, I think Iran fired hundreds of drones. Right? We're now getting into more of a drone and drone fighting. So that's on the autonomous, right? And let's have a quick look on the energy side. Energy production is important economic growth. We don't have to talk more about it. Go through the history of the countries in the world. All before you move from a developing, to the developed, one common factor is low cost of energy or increase in energy production. US had done it. Now China and India and other developing countries are building their power generation capacity. There's a study that shows in terms of overall China capacity by the end of 2023 was actually 2.5 times capacity of US. You will need that energy. We cannot, any country, if they want to become a developed country, you need a source of cheaper energy. Right? US electricity prices have gone down, which is true. Nuclear energy regulation ended the decline in electricity prices because we're saying no more nuclear energies. So then the price starts to go up. But over the last few years, across the world, or at least, we are seeing a lot more nuclear, at least in China, we are seeing a lot more nuclear plants coming up. I know in Europe had shut down some of their nuclear plants. Now they're planning to restart it. And after a change in administration in US, now we are suddenly in favor of restarting or building up a new nuclear plants. May not be as big as what we used to have, but new technology using SMR, small modular reactors, and basically try to generate electricity at a much cheaper rate, right? So SMR, there are a lot of companies in SMRs that are now raising money. Some of them are public as well. I think I have a list here. And then the biggest consumer of electricity maybe for next few years is going to be all these big hyperscalers, because AI needs lot of electricity, right? And that's why we saw some of those company stocks, energy company stocks, utility stocks have gone up so much that utility is now the second best performer sector this year. Okay, I'm not getting the tech. Okay, this is where I have. While most SMRs will fail, the survivor should thrive, right? So right now, if you want to invest in smaller modular reactor, because that's being talked about in many circles, right? Understand you're investing as if investing in a venture company. These companies should have stayed private, but they're coming in because market is willing to give them money. But you don't have to dive in unless you have a venture investing mindset, right? So we still have a lot of a risk in terms of execution risk is there. But if you're interested in these, some of these names you can take, like CEG, Constellation, BWS Technology, Chemical, Energy Fuels, Oklo, they build advanced fast reactors, and the NuScale Powers, ticker is SMR. Right? We can follow these companies and see how they are doing. Currently, probably many of them be under huge losses. Many of them will fail, but so it has to be a very any money that you put in should come out from your high risk investment portion of your portfolio, which means you don't need that money to pay your next week's your vacation. Otherwise it won't be nice that you have to cancel your vacation because the market went down. right? I'll skip the fusion stuff. Nuclear and other renewable energies can serve as a viable solution, which is true. Tesla accounts for 19% of global energy storage. And if you go back and look at the Tesla's quarterly earnings, the energy business is growing like crazy. Car business, Tesla is like being challenged from all fronts, right? Your sales are going down in Europe and in China. Your margins are going down. Now the operating margin is what? Mid single digit, 6%, 7%. Right? So that whole Tesla EV, that story is gone. Everybody understands making car is tough. In fact, auto business collectively, not individual companies, but collectively, auto business is one of the worst businesses to invest in, because together this industry doesn't even generate enough returns to meet the cost of capital, right? So pretty bad industry to invest in. But yeah, there will be individual companies who probably do good, like Ferrari has done wonderfully great, right? Tesla's car business is nothing different than what other car businesses are, but their battery energy doing pretty good. And then we are talking about robo taxis and autonomous and Optimus. That's where all the valuation of Tesla will come out to be. For just a car company, Tesla's valuation should be maybe $100 billion, $200 billion, not $900 billion where it is. Okay. All right, as battery costs decline, intermittent energy source become less problematic because then the producers won't have to sell electricity at negative prices. Which was a very interesting article that I read. I never knew that sometimes the producer will just sell it at a negative prices. I've seen oil price going negative during the COVID when the futures were like negative um, at some point of a time. I forgot the number, but the oil futures was trading in a negative prices. I never seen anything trading at a negative price. So when I was reading that article around, sometimes the electricity you can actually get paid to consume the electricity. Right? Some other discussion of why the producers of electricity have to do this, but there are cases multiple times in a year when the electricity generation the companies, they actually pay money to the consumers to take electricity from them. But if you have a batteries, low cost battery storage systems, then those producers don't have to sell it at negative prices. Okay. Regulatory reform should boost all renewables. So basically between 2009 2023, interconnection approval, which is connecting the renewable energy with a normal electric grid, it increased to 56 months. So now this is where the new administration is talking about unleashing some of these your economy by deregulating some of the spaces. Like one of them could be this: you could have a much quicker approvals on some of these energy projects. And lastly, robotics, which is decoupling time to, okay, I'll skip this one, right? So if you heard Elon Musk pitch, you will already know what they talk of robotics. Now ARK, they forecast global manufacturing GDP at $32 trillion. It's a $13 trillion revenue opportunity, is what they forecast by 2030. Right now, it is almost nil. So I would say just tone down our expectations. Directionally, yes, it will increase, but I don't think it's $13 trillion, right? Then you have a bunch of humanoid robots. Again, Chinese companies are ahead than the US companies, but I saw figure eight humanoid robots are doing good. There was Amazon has its own humanoid robots, and then of course we got Optimus that we are waiting for. What else? There they talk about the use case of how employing a humanoid robot, is better and will be much more cost effective in a longer term than employing humans. And this is a little tricky subject, right? It's gonna cause maybe another wave of layoffs. Jobs are just bundle of tasks. Washing dishes is one of the three tasks required out of a dishwasher, right? There are a lot of other tasks. So when you now if you are a designated dishwasher at your home, can go and tell your partners, I'm not just doing one task. I'm doing these 13 tasks. So again, these are discrete tasks, all everything, all what the ARK Invest is saying, hey, robots can do it at a much cheaper price than what a humans can do. Um, automation turns non-market activity to revenue generating activity. Um, I'm not really sure because what they're talking about is 80% of so all they're saying is currently those who are involved in, let's say, non-GDP accrual activity, like if you're washing dishes at home, that doesn't add to the GDP. If what it is saying is that those unpaid family workers that used to work in farm, when the farming became mechanized, they started adding to the GDP. It was possible because they moved into other manufacturing jobs, etc. But depends on when we are replacing these human, let's say, line workers with humanoids. Only if those replaced workers are able to find alternative jobs, it will add to GDP. Otherwise, it will add to unemployment. But I think the first generation that goes through this cycle of disruption always suffers. And then, you know, you get a different type of jobs, new generation reskill themselves into, we don't need to learn how to ride, you have to drive a horse carriage anymore, right? Once the cars came in, the first generation of horse carriage drivers became unemployed, but I'm sure the next generations realize I need to get a driving test, not the horse carriage. I don't have to learn the horse carriage driving. And we'll figure out in when we have a lot of humanoids, we'll know that I don't need to go and learn how to operate a lathe machine or a welding machine. Maybe I need to learn something else. Consumer continue to contribute unpaid labor. I don't know. Me personally, I don't. This is factually correct, but sometimes there's a joy in doing an activity, right? I would want to do something because it gives me pleasure in doing it, whether it contributes to GDP or not, I don't care. So, but if you are looking just from an angle of investor, maybe you just look at what the dollar value, yeah, then this does make sense. 3D printing is back. Those who've been in the markets, 3D printing was like a hot topic during 2013, 20 up to 2016 and all that stuff. Didn't really work out then. Maybe it will work out now. It has consolidated significantly. Nano Dimension is one company which is there. There are other competitors. Stratasys, I remember there, and I have a bad experience on investing in 3D. At that time, there used to be a company called Motif Investing. CEO was, I think, Hardeep Walia, ex-Microsoft guy, in which you could invest in themes, right? And I was just starting my investing journey. I had no idea about how the market works. So like 3D is a good theme. So I invested through the Motive Investing. I put some money in that. I guess maybe I lost everything. And then when I started to clean up, of course, I sold all of them. But I remember during that time, 3D was a big theme to invest in. Now it's back because of advancements that we have seen in 3Ds. Nike did not have success with this, but I think On shoes have a good success with 3D printed shoes, but Nike did not. So I don't think that the writing is on a wall, but we're seeing a lot more use cases on 3D. 3D printing makes parts for nuclear applications more efficiently. This is good. There are niche companies working in very niche segments on 3D, right? So I don't think we could just invest it at a segment level. Maybe you have to pick company specific, right? At least I have to see the large scale adoption. I talked about Nike anyway. Nike had some issues. On has one model which is 3D printed model. Alrighty, so I guess the last one is reusable rockets. Everything in the reusable rockets is, I think, in a private sector. Rocket Lab is, but they don't do reusable yet, I guess. So SpaceX has got a lot of head start in this one. But you can't invest in SpaceX in the right way. You could invest in SpaceX by taking exposure to some of the companies that invest in the trust funds and then create an ETF out of it. But you'll have to pay through your nose. I don't think there is anything which is we could actually use it right now. Now, I guess that's it for today.